Good morning, guys. Ooh, fucking speakers on. Hang on. There you go. Now I get this sound, cycling back. I had to turn on one of the computer speakers. So good morning, guys. Welcome to the Monday, September 8th. And I have to say, Friday's employment situation was a shitty report, wasn't it? And initial reaction was positive. It it made you believe, think that they were expecting a lot of rate cuts based on that, and then the whole thing came apart as the market opened, and and that's actually, um, even if it was down, that's actually a positive thing. That means that bad news is actually interpreted as bad news by the market. So bad news was bad news, and market took off to the downside. I watched that sell off after the fact, and it was like, wow, that was pretty brutal. And I stalled and started trading the right back here to that 6470 attractor area, and that was it. But a nice little pop, and you made a new high before they actually totally fell apart. So I don't think it was that crazy bad in terms of a reaction. Not surprising that they sold off on bad news, but that's actually a probably healthy thing that they did that. So that's kind of what the way I look at this employment situation. Hope you got some trades off on that thing. Usually when it gets crazy volatile like that, you had to be really cautious trading it. So that's my take on the employment situation. Myself, I was out there chasing marlin for 3 days. Yeah, we could have done better. That was long days staring at jigs and staring at water, but it was a beautiful weekend. A little bit rough now and then. It's get your ass kicked a few times, but overall a pretty darn good weekend, I have to say. But it's market-wise and news, financial news. We are looking at pretty much nothing today. So uh, no news Monday. Tomorrow we get the small business, pretty much no news tomorrow. We have a 3-year auction at once. So Monday, Tuesday, pretty much no news. Wednesday we get the PPI read and a 10-year auction. On Thursday we get the CPI read, jobless claims, and a probably a 30-year auction. Yeah, 30-year auction. And then we have consumer sentiment on Friday. So not a huge news week. This PPI, CPI numbers are getting less and less important, if you wish, in the bigger picture. I think it's given that pop in PPI. I think it was PPI pop pretty good. We'll see if that stays the same or it's getting hotter, or if these numbers starts getting hotter, then there may be a reaction in the market. But we'll see when we get there. So a pretty light news week, I had to say. PPI, CPI, the big ones coming out the midweek. But nothing to drive the markets today. So looking at this going into today's trading, we have a pretty good edge right here. I wanted to actually make that bigger. Hang on, I'm going to do that while I see it. So I want to cover that ledge right there as well on this range. So this 4 little edge, I'm going to cover that one up to that London low. So we get a little bit wider, and I had it. And that's because this is going to be the edge to pay attention to. If it starts trading below that one, we'll be back range bound in this lower range. Maybe even starting off. Well, I would have started off with a bias to the downside. If I did the analysis on Friday, most likely I would have been pointing this lower going into the overnight. But the fact that the overnight traded up above that 64.90s and held above it, I would probably start off range bound and watch that lower edge. If they can hold that 64.90s, I would be more inclined to see this one maybe trade this higher. But you never know. Chances are they're going to take out that 64.90, trade back here to that 64.70 attractor area during the day session. So I'm going to start off range bound. If they start taking out the 65.05s and 65.15s, these two resistance areas, I would be right back on the long side again and start thinking about this one making new highs. So they have a potential opportunity. And they did make a move out of the middle, or that could have been interpreted as that business was news, and it was promptly reversed. I'm not going to necessarily say that, but if we not at this point, but if they but if they start taking this higher in the day session, I would be right back on this one. It could certainly be a move out of the middle beginning and potentially taken going higher. So we'll determine that as the day progresses, if this really becomes a move out of, or stays as a move out of the middle or develops into one. But this pop in the going into the labor report is pretty much that, just the a probe to the upside, which got knocked down. But watch that lower edge, 64.90s. If that comes out, we are back range bound. Still looking to buy against 64.80s, 64.70s, and 64.60s for rotations back up. If they start taking out the 60s, I think we're getting it more selling at that point. So if you want to be a little bit more aggressive on it, a short trade below the 64.90s, around about here for rotation back to this area could be the only short I would consider early on. Since I'm still looking to buy against these support areas, then it's a tractor. But if they start heading lower, I would wait for 64.60 to come out before I start hopping on the short side again. So either you get good trade location when they take out that upper edge. Getting short on the way down here, I don't think it's going to be that high probability kind of trading. I would rather wait for them to start taking out the lows here and then really start selling off. That's when you can consider that area taken out. And that means that this would be 64.60, 64.45 to 50. That would be right here at this lower area. So they start taking out this lower area, this low volume area. We can see it run down to the 64.08s pretty quick, or 6400s, maybe even lower. But right now they're holding right at or above the mode here on this prior distribution. So starting off range bound, watching that lower edge. And if you start taking out this upper area, 65.05 and 15, both of those, I would be right back on the long side a little bit more aggressively. But I would look for short setups against these 05s and the 15s just early on here, since we are starting off range bound. So a pretty tight range. And I'm just wanting to see if this overnight strength is really there or not. Because right now they're holding on to it, but it can be reversed very quickly. So we'll see. So good news, a reaction for Fed cuts. Bad news is bad news reaction during the day session. Let's see how people have digested this over the weekend. And if they're going to settle in on the Fed, probably more lenient on or giving them more rate cuts, since it certainly seems that labor market is coming apart a bit. All right, so that is the ES to get started and my 2 cents on the employment situation. Let's see what happened on the NASDAQ and the bonds. So bond market popped pretty good to the upside. And they're up here at the 116, 116.20s right now. That's a good sign. It means rates are coming down. Maybe we should get my F1 on the bonds. That means that the rates are coming down on the bonds, and we're taking out this upper area. So we are heading up towards this attractor at 117. Now, if that holds, we could be in pretty good shape on the bonds. They're definitely taking out this. This could be a start of a move out of the middle. Not quite there. They're still up against that upper edge at the 116s. So they're up a little bit high, a little bit above that. The 16 here is the lower end of this distribution, but it's close enough to warrant pretty much it's kind of a little bit less aggressive shift on alongside. But if you start taking out this area, this upper area, the 16, this 4-letter letter at 117, we could be finding ourselves in new high, but bond market starts trading higher. That just means that long-term yields are coming down, and that's going to be a welcome sign. I think the mid caps and the small caps can do pretty good if that starts happening. So that's your bond market. Start trading that from the long side of the market. Look to buy against support, 1610s, 1604s for rotations back up, and that's about it. There could be a 1620, but I'm watching this probe just as a probe for now. If they hold above it, I would be looking at that for a potential long trade. But right now, I'm not only looking for 1610 and 1604. This one right now looks to me more like a retest failure type setup, which is maybe developing in front of us. If this probe fails and they start taking us lower, that retest failed, and we are pretty much heading back into this lower range. Then we need to watch that 1604s. So let's see if this bond market turns into a move out of the middle. It's all hinges on continuation from or interpretation of Friday's news, you know. Are you going to be on the side of a bad report? Is labor markets coming apart? We're going to sell off? Or are you going to be thinking, oh, we're going to get a ton of rate cuts and the Fed is going to support it, so let's take it higher. So that's a trade-off I'm thinking. On the NASDAQ, we had a pretty good move to the upside. Same story there, big pop, and they took out the 800 for briefly and then a complete reversal, but not too bad. They're holding above the 23 600s. And I would look at that, yeah, that 600 edge to shift to the short side on this one. So starting off range bound on this guy as well. Almost leaning towards the long side on this one, but it's again, I'm just not quite believing it just yet. Watch them take out the 780 to 800 resistance area. If that comes out, I would be back on the long side, a little bit more aggressive on the NASDAQ. So looking to buy 730s and 690s. They're going to get short against the 780 to 800s for rotations down. Pretty tight range to get started. They start trading above the 790 800s. I would stay on the long side. Cautiously, but staying on the long side of this. And if they start taking out the 690 to 700 here, this support area, I would be going back range bound, or not yes, we'll be starting off range bound, but I would just give it a little bit more room on the downside here before I start shifting to the short side. So we're starting off range bound. I'm almost thinking short side below the 700, but we're pretty much back in this lower range. So I would just stay range bound at that point. 650, 600 as buying opportunities still. But below the 600 or 590 to 600 here, I think I would hop on the short side. So see if they can run it even lower. Lower attractor here as a 470. That would be down here. So if they start taking out that edge 600, I think they can run down to this lower attractor, maybe even lower. So fairly quick on taking off, on starting to think about the short side, but I would wait for confirmation at below 600. Doesn't mean that you can't buy against the 690s and the 650s as well for rotations back up. I would just be a little bit less aggressive about it. So if you want to get on a short trade early on the NASDAQ, when they take out the 720s here, that would be the first spot. Maybe the 690s, these two support areas. If they start backing off more than that, I would I would look for a further retracement. Still considering buying opportunities at the 650s and the 590 to 600s. So it's all about is this move out in the middle to the upside going to hold for the day session, or are they going to just reverse it back and it's going to turn into just a probe which failed? That's the way I'm looking at it. And then finally, oil and gold. By the way, it's just so you know, we are rolling this week to the December expiration for the indices and the forex contracts, the currency contracts, and it's going to be after Friday. So I put another day in. I usually roll Thursday into Friday. So Friday would be the first session, the first day on December. That's how we usually do it. I added one more day because it usually is pretty thin on Friday. So I included that on the in the backfill for September. So we're going to be one more day on September before we roll it. Right. So after the after Friday's trading, we are rolling to the December contract. Gold popping. It is definitely a lot of pressure to the upside on gold, and the only thing I can think of is all the turbulence going on right now between Russia, China, the U.S. It's a complicated situation. That peace deal they were doing looks stalled, I guess, and we'll see if these secondary sanctions going to start kicking in. I think that's what the market is reacting to. If there's going to be a big standoff, foreign policy or foreign international standoff about how to handle Russia, India, and China together. Because India started popping up in the circles around Russia. So they had this big meeting in Beijing last week or last weekend, but all three of them closed it up pretty good. So now to show what to make out of it, that's anyone's guess, but I think that could be one of the reasons that gold is popping like that. Foreign issues, foreign global concerns, global uncertainty, that's where gold shines the best. But I will stay on the long side on gold, looking to buy weakness at this point against the 36.46, the 36 to 37, 36.30s, 28 to 30s here for rotations back up. Below that 30s, or 26 to 27. I would start shifting towards the short side and confirmation below 36.20s for rotations down. At that point, I think they take out these two. I think we are retracing. So the question is this area here, 3600, it's going to be turned into an attractor area. And right now they're probing above it, but they could just pretty quick retrace right back to it. So we'll see what they're going to do. Right now, I would start off on the long side and let it show me if they're going to try to take this higher or not. It's been very volatile on gold, and I have not tried to trade it. It's one of those markets just looking at it and say, okay, this could get you crushed pretty quick. So initially looking to buy against support 36, 46, 47, 36, 37, 36, 37, and then 27, 28 for rotations up. Last one to buy against is 20, 19 to 20 here. And below 1920, I think they're right back here to the 3600 at that point. So it is volatile for sure on gold. And these bars right now, 54 up to 57, like 30 ticks, these bars. I used to trade with a 40 tick stop, but these bars, which looks like just meandering at like 30 ticks. So it's a lot of volatility there right now. On oil, that's going to be the one interesting one to watch, because how global oil supplies gets impacted by what's going on now in this all new and between India, Russia, China. That's going to be interesting to watch. Right now, oil was probing lower, down to the 61s, and now they're right back here to value again. So they've been probing higher, they've been probing lower, they're still holding around 63, 64. So I would just start off range bound on oil. Maybe look for a short against the 63.20. That would be the last one. I think they're right back up to this attractor right now. So if they start trading below that 62.70s, I may consider a short trade. Reasonably aggressive on that one, because it's if they're going to run it down and retest that low, it's going to be happening pretty quick, I think. So if this overnight is going to turn into a retest of that low, that could be a initial short at the higher levels at 62.70s, or potentially buying opportunities down here at 61.80 and the 61.40 if you get that far down. So interesting action on oil, but the global structure on this one, the long-term structure is range bound on that guy right now. They're probing higher, they're probing lower. Eventually, they're going to bust out of it. But looking at that overnight retracement, pretty much the entire rundown, well, you just have to take that for what it is and consider this could be a bounce, and then in that case, we'll see a retest of these lows. But if they just trade up above that 63.20s, we are just back in that upper range again, and we just stay range bound at that point. Still looking for shorts again, 63.70, 64. I would say up to 64.50s for rotations back down. They're pretty much trading. That would just be a trade fading the little bit of early strength, rotations right back down again. So that's how we get started on oil. So range bound oil, let's see, the only short I'm considering right now is 63.20. But if that comes out, we're staying range bound, trading it as a range bound market. If the 63.20 holds and they take out that 62.60s on the downside, I would try, I would look for a short trade, see if they can take this lower. But as I said, oil and gold both sloppy, and a lot of cross currents going on in those markets, so trade those with caution. Okay, back to the ES, and right now we're looking at nothing. That's exactly where we left it. Bond market looks like they're backing off. Looks like that was a retest failure, they're backing down again. So Let's see if this little early strength we got in the before the open now is going to hold, or if it's going to turn into something. It's going to turn into a move out of the middle to the upside. Alrighty, guys, we'll wrap it there. We'll see you back at 11:30 for the next update. So good trading. I will see you guys back then.